About 2 more minutes. Appreciate you guys' patience once again. Recording is rolling now. This will be posted to the YouTube. As always, if you guys have any questions, you can go ahead and post them in crypto chat or at me in stream chat, and I will go ahead and see if I can get those answered for you during stream. If you want to ask any questions, feel free to just open up your mic. If you do not have privilege, just let me know. About 2 more minutes. Alright, that 5 minutes is up. Appreciate everybody who had joined. Thanks again for you guys popping out Thursday night, getting some information down, trying to learn, right, better ourselves, better our trading style. Today we're going to go over a lot. It's going to be very, very similar as far as what we're looking for as always, right? It's the same type of behavior we're looking for, but we're going to go over liquidity. We're going to go over some gold, GBP, JPY, some ETH, right? Some recent plays that have come up that back this logic and back this idea that is being taught right through these streams and through what you guys are seeing on the charts and through this institutional perspective, right? So understanding our rules and maintaining them until we are proven wrong is going to be very, very important. Now, what I have on the screen here is just a basic pattern, right? We're going to be looking at a bull flag or a bear flag, but for those who don't understand liquidity, or just to reiterate the subjective of it, right? The entire information on how liquidity actually works, right? Let's say we have an issue or a trend where price is moving up, down, creating higher highs, higher lows, and then it starts to consolidate, right? And retail gets this, the uninformed money, when I speak of retail, gets this idea, right, that price is going to squeeze and then break out, and we see this flag that is being formed. As institutional traders, we understand that these trend lines are liquidity, right, instead of that pattern, and if it breaks down, then we look to short it to the downside, or if it breaks up, we look to long it, right? So in this situation, for those breakout traders who are trading to the downside, they're looking at something like this, right, with their stops underneath maybe this high right here, looking to take this either to the downside, right, to areas lower, or a breakout trader looking to take it past these highs, right? They say, okay, if price breaks these highs right here, I'm going to put my stops under this low, right? And I'm going to take it higher. However, they're believing that. So this is your breakout traders, right, that are looking to enter their trades. They have limits that are open, trying to take price to the downside, or limits that are open, trying to take price to the upside based off of their levels, right, based off of their lines. And MetaFX talks about this theory, but just to reiterate this as well, right, let's just randomly go over here on price. Let's look to the left. I'm going to go like this, right? And then let's take 3 lines and let's draw them out. Just random 3 lines, right? So these 3 lines are drawn out right here. Now let's go back to the right. Anybody, right, could say, oh, price crossed this line to the upside, right? We broke up once and then we broke up again. We came back down, retested the line, right? I'm going to buy right here. Anybody can say that, right? Price is going to look like it's reacting off of certain zones on your chart. All I did was just put down 3 random lines, right? And it looks like price is reacting off of them, right? short when you get right here, right? Price goes to the upside, breaks back down, short the retest, right? I could sit there all day and tell you to short this or long this, but we're not understanding the actual behavior, right, of what is being told. So we get in these situations to where we have a zone or a certain area, right, that we are looking for price to respect, and it doesn't end up respecting that, or it raids liquidity and introduces either new demand or supply, and then all of a sudden we are completely out of our bias. We start making unnecessary trades, right? Get into these situations to where we get confused. But anybody, right, can put 3 lines on a chart or put a box on a chart or do something like that, right? And say, okay, price respected that long here or short here, versus understanding our actual behavior and what price is going to do. So with that liquidity that is being told, right, this mindset, this 3-line mindset that I have that we just talked about, is that same mindset that the uninformed traders have. It's that same mindset that when we go back to the flag over here, they have that same mindset. They say, my line's right here. If it breaks down, it's going to respect my line. What does your line have to do with how price moves, right? It does nothing, right? It's literally just a visual aid for us to understand how price moves, right, better. So with this being said, we have our breakout traders that are in trades, as well as our range traders, right? Our retail that is trying to get in early, our early longs and our early shorts. So we have retail traders getting in longs right here, putting their stops under lows right here, right here, right here, right here, right? So I have all this liquidity with all these stop losses that are being in place, right? Opposite for the short end. Once we come up to the top side, right, the top of the flag that we are consolidating, we have retail shorting here, 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 and here. So we can see all of this money, right, that is available within just this range. So what do we as institutional traders, right, look to do? So if we go ahead and take out all this liquidity, understand that we have liquidity here, right, as well as we have liquidity here. So if I bring this up here, right, we have the breakout traders as well as our people trading inside of the range showing that liquidity. So we had everything in place, right? So now we are looking for structure. Overall, we understand we are bullish, right, from this large impulsive move to the upside. We have our liquidity. If I go ahead and draw a trend over here, it would look something like this, right? Prices coming down, making lower highs, lower lows. Price comes down, shows that liquidity raid. Right, break structure upside, and then all of a sudden it is out of the range. We look for that reaccumulation, right, that rally base rally that shows that demand within this area. We understand imbalance as well as our premium and discounts. So let's go ahead and draw that out, right, and look for that rally base rally that brought that break of structure out of the entire range, to look for another reaccumulation, right, for prices higher. We understand price is bullish at this point in time as institutional traders. To just make it simple, right, we are looking for this, and this. Just price to create a higher low, right, from this overall impulsive move that it had made. And then from that, we can look to take trades on confirmation, right? So we understand where liquidity is at. We understand we are bullish. We understand our equilibrium, right? As well as the areas of demand that we will be looking at from the rally-based rallies, right, that occur over here. So we also understand where our liquidity is at. So in these situations, right, if we are looking to take price to the upside as institutional traders, right, we are looking for the sponsorship of demand after a mitigation of demand or an imbalance, and then in discount, right? So within this situation, we are looking for price to come into discount, right? Take out this liquidity, so take out these early longs that are trying to get into these trades, take this to the upside, right? All the early longs that we had shown, as well as leave these right here. So we want to see price leave a reason to come back up after mitigating demand and mitigating imbalance by leaving these highs, right? This liquidity that now gives me an available target from now this high to this low. I'm targeting the next week high, right, after confirmation. So within this situation right here, we get this situation, right, where we come up, raid the highs, we still respect this high, right, that caused an internal low, and this high that caused a low internally as well. We want to look for price to start coming down, right? What does this do? Trigger these buys right here, opens up that liquidity, mitigates supply over here. All of a sudden, these traders are in their trades. They're stopped out, so they're like, okay, let's short it. So they short it. They're now in profits, right? After this bear flag breakdown, prices coming down, creating those lower highs, lower lows. We see that liquidation rate and then that break of structure upside. One, we can look for that imbalance, right, on the lower time frames after that liquidity rate to the upside to look to take our trades, or wait for that double market structure break for the demand zone. And then once that happens, right, we end up getting that continuation overall, targeting that higher time frame weak high that was formed. So within this trade, right, within these trades, we can see that we still left the highs. We left these highs right here, right? We took out all the lows. We came back into discount, mitigated that imbalance, right? That caused this break of structure upside from this demand to this high right here. Ended up breaking structure again, and then from that we saw that continuation, right, after all the early longs were taken out of their trades. So understanding that we have our shorts here, we now have a target instead of looking for, right, the breakout or the breakdown. We now have an area to look to enter after we get, right, that first break right here, second break right here, area of demand, with our stops underneath this low right here or this low, right, however you are looking to risk it based off of our entire strategy. And then you get that first take profit right here, right, and then you will get the continuation of higher liquidity and supply and demand at the top of the zone. So this is our theory, right, of understanding how retail traders are manipulated out of these certain quote-unquote patterns, right? So I'm going to go ahead and show you this now on the charts. We're going to show XAU USD, right, how this happened and how we understood, right, that overall we were still bullish and we were still looking for bullish continuation until proven otherwise. So let me go ahead and get rid of this. And then let's go to XAU now. So understanding, if I go to replay mode right here, we talked about in our last stream, right, the short that was presented from this liquidity rate to the upside, right, to the left over here, imbalance fill over here. We saw that 15-minute, right, double break to the downside, indicating our hourly wants to pull back into liquidity, right, lower within the range, into areas of demand, lower within the range. We look for price to respect this low that caused this high out of the range, and we look for price to accumulate in discount, right? So within this certain time, we got this trade that was presented right here. Price is moving to the downside, coming into areas of demand, and we are looking for it to accumulate, manipulate lows, leave highs, so leave a reason to come up, right? That liquidity that we were talking about before, so we can look for exactly what we were talking about before. So looking at this from a retail perspective, looking at this from an institutional perspective, right, we can see all of this liquidity. We can see that we were in premium, broke structure to the downside, or coming into discount, right, rating liquidity lower in these areas. Now, let's take away these, right, and understand this from now a retail perspective. So just what we were talking about before, try to keep that in mind as we're looking at this. So we have a trend line here, right, and a trend line here, looking at a possible some type of channel, right? Prices respecting this channel, price raids the high of the channel, breakout traders are taken out of their trades, comes back down, starts to move up again, maybe they enter again, I don't know, right? Raids liquidity, breaks structure to the downside once, twice, and then breaks down. So now we have all these shorts that are getting in these trades, right, in discount. So we understand as institutional traders that we are going to be looking for buys from the overall bullish structure that we have put in. So now that that trade opportunity was presented, we have our area of liquidity, right, that we are targeting, as well as this imbalance lower, and we understand where retail is getting in. So now that we have this breakdown, retail is looking to get into these trades, right, form that liquidity. Now let's understand what price does down here. So after mitigation of our demand zone, we end up seeing price break this high right here. Let's go on the 5-minute. We had this raid to the upside right here, this impulsive move to the upside right here. We look for the sponsorship of that. Why am I looking for the sponsorship? Why am I looking for the institutional candle, right, at these lows? The reasoning for that, right, is this redistribution that is coming down, causing these equal highs that we can see right here, right? All of this liquidity that is being formed on the way down that we were talking about before. The reason to come back up, right? The reason price can just push through all of this liquidity right here. We look for the rate of the lows, the constant manipulation, and then that impulsive break of structure from the most recent high that caused the new low. So within this situation, we see lows rated here, lows rated here. The final low is rated here, and then we get that break of structure that is present right here from this impulsive move. So we look for the higher low, and then we look for that continuation, right? So at this point in time, we see that, we get that mitigation of lower time frame demand. If I go on the 1 minute to show the refine of this, you go ahead and get rid of this. Where did my, here we go. All right, so we have the mitigation, right? The liquidation rate to the downside, break of structure to the upside. Let's go ahead and look on lower time frames, see where it was refined to, how we could have refined this, right? We got the liquidation right here. Break of structure to the upside right here. This is your demand zone. We have a liquidation rate as well. If I go on the lower time frames, which unfortunately not all of you have the lower time frames, right? Going on a 30-second chart, we can see that this was our most recent supply, that liquidation rate to the downside. A break of structure to the upside occurred after that. The candle before that candle was found right here, as well as we have an imbalance. So that tells me everything, right, that I want to see when price comes into these areas after that impulsive move to the upside, as well as liquidity, right, that was rated to the downside as we are coming into these areas. So this is your 30-second. If I show the 15-second, right, that can be refined to that 15-second candle before candle that broke structure to the upside and started that impulsive move. We end up seeing price respect that, right, and then move higher from that point in time. We are at the low of the range right now in discount and demand that we had talked about before, as well as we have this supply zone right here. Why did I pick this supply zone, right? From this low right here, we broke structure to the downside. I chose this low right here because we broke structure to the upside here and then respected this low right here. So this is where our next demand was introduced on this leg up, and this demand was broken to the downside here with this displacement candle. So where's your candle before the candle that broke structure? Lies right here, right? And on our higher time frames, if I go to the 15-minute, we can see that 15-minute candle again, another displacement candle, right? Multiple time frames are showing us multiple confluences. So let's go to lower time frames again, wait for this to play out, understand where our liquidity is within the range, and understand where we could possibly respect or not respect demand or supply. We have a supply zone up here. Let's understand where our liquidity is within the range as well. So I have liquidity that is present here. Let's just draw this out as liquidity. We see price respect that, right? Start to move higher. If I'm on lower time frames, after we get that range break, mitigation of demand right here, looking to take it into liquidity, you get your first break, second break, mitigation of that demand candle that is present right here. And then we end up respecting the supply zone, end up taking out that high, come up into areas higher into buy side liquidity. We take out the buy side liquidity. So now that the buy side liquidity is out of the market, we have one, the ability to introduce new supply and come back down. If we introduce new supply and come back down, this will tell me that this was a pullback. Why would this tell me that this was a pullback? Because we did not come up to the areas of supply that caused our inner range breakdown and instead mitigated demand, broke structure to the upside, introduced demand, right? And then rated liquidity. So now that the shorts are out of the market, right, we see longs and trades if you are a retail trader or the uninformed trader, right, trying to gamble basically. We could see a trend line breakout right here, right? Unconfirmed trades is what I mean by gambling, right? I don't think you're a retail trader if you trade trend lines and you have a very, very profitable system and have a very, very profitable risk management system, right? I will not ever bag on anybody for having a profitable system. So we see that trend line, right? We see that broken. We see it coming up into areas of premium, right? From this high that caused this low right here. So if I go ahead and just mark that out for you guys to show that. Right, we can see we're coming into areas of premium. I couldn't get down to that low, but that's where I would mark it. We see we have now taken out the shorts and filling imbalances, right, within these areas. So if I just raid liquidity, I'm looking for a pullback. If I mitigate supply and break structure to the downside, then I'm looking for that full-on confirmation, right, that I can now take prices lower. So Let's watch what price does now. Look for these areas of demand and areas of liquidity within here. And understand overall we are still bullish, remember. So we're still looking for higher prices while retail, right, is looking for those lower prices. So we have our area of supply. Let's watch what price does now. Now that the shorts are taken out, we get a liquidity rate upside. Does it mitigate our area? No, it does not. What happens? Price starts to come lower. What does this do? Starts to create that short liquidity again, right? Exactly what we were talking about before. We can see where retail is getting in trades, thinking that price is going to go lower because it came close to their zone, right? Came close to their zone. Maybe they had this zone, maybe they did not, right? If it came up to here, they're like, I'm just going to short it right here because it came close to my zone. It should follow, right? Well, that is not the case because we understand, right, where that supply was introduced, where it actually happened, where we broke structure to the downside from our supply introduction here, right, respected those highs that made new lows, and then we look for that continuation. So we see price come back down into areas of demand. Why did I choose this demand candle, right? We can see this move to the upside right here was broken structure. The candle before that candle lies right here on the 15-minute. Let's go to our 10-minute, show some more confluence, right? We see an imbalance that is present within the 10-minute candle right here. We can see we actually mitigated, it looks like, the 50% of that imbalance. If I go ahead and draw out a Gann box. Right, on just the 10-minute chart at this point in time, we can see we came back down, mitigated that imbalance, that broke structure to the upside, right? Your candle before that candle as well right here. Let's go to even lower time frame so we can see the multiple confluences. You have your impulse candle right here that caused reaccumulation that broke out of the range right here. So if we have a break of structure right here, right? This was your full range break. So what broke that? Right here. Here's your candle before that candle, right? Multiple confluences on multiple time frames in one specific area, in one specific candle, right? So now let's understand what we are looking for now. We can see that this low right here caused this internal high. We see a break of structure to the downside with displacement. We see a candle that is formed right here. So one, we could come higher, right, into areas of supply from our overall bullish perspective that we are putting in, or, right, come lower into areas of demand, and this would be a more reaccumulation term where I would say, okay, I'm looking for reaccumulation because we're leaving all these highs, right, coming into these areas. I would look for a liquidity raid and then double break of structure to prove that I wanted to take this price higher. Now, if we go back, understand what we are looking for, let's see how price plays out now. So we start to move higher. We break this high that caused a low. We mitigate this demand candle, raid liquidity, introduce new demand on lower time frames, and then start to continue to the upside. What is this showing me? What did we say before? We are looking for more of a reaccumulation if we were to come down into these areas, right? And respect this low that caused this high from our overall range, continue, right, to accumulate in discount so we can look for those higher prices. Now, let's watch what price does as it comes up into now our areas of supply, takes out all the early shorts. And let's understand what we did when we mitigated this. So if we take this away, look at what we left when we came down. What is that, right? Sell side liquidity here. I have sell side liquidity here. My internal structure is bearish, so I can look for this weak low from this internal strong high that was present right here that broke that entire range previously over here. If, right, I can receive that 1 minute Wyckoff within my zone. Why am I looking for 1 minute Wyckoff within my zone? Well, because our higher time frames, right, show that hourly break of structure to the downside, and then we can get that confirmation of that introduction of supply with that double structure break, right, to the downside once we get that mitigation and liquidation within our area of supply. So let's go to the 1 minute now, understand what price is doing as it is coming up into that area. and understand the liquidity that is being formed as well. So we see price, right, break structure to the upside here, come back down, mitigate this imbalance, start to continue higher, and then this is where it starts to get unhealthy. We see price move higher, and do we see it start to create, right, healthy higher lows within this range as we start to mitigate supply? No, we are just seeing moves up, right, leaving imbalances, just respecting the imbalances and continuing up, leaving lows, right, as we are coming into this range. So let's see what we do now. We start to come up more, and this is where we start to consolidate. We can see equal highs that are being created within our supply zone, starting to now validate our supply zone if we can get a liquidity rate to the upside and that double market structure break to the downside. Let's go ahead and watch what price does now. We get that move up, and then this is where we get that displacement candle to the downside, right? So now I'm looking for price to respect this institutional candle here. Yes, this would be unconfirmed if you were to take trades, but we get our first break of structure right here. And then I'm looking for that second break of structure to the downside to then confirm our area of supply, our Wyckoff within our supply zone, right? To then take it to areas lower from our overall week low, right? Weak low that is present right here, liquidity that is present right here, liquidity that is present down here as well, and our overall internal bearish structure. Let's play this out a few more. All right, here's where we get, right, that break of this low right. Actually, wait. Nope, we get that break of this low right here with this displacement, right? We can see this displacement candle broke that, and then the candle before that candle on the 1 minute time frame, right? After, again, our M that is present, market maker M, right? That supply introduction that we always talk about. Presented right there with that double break of structure to the downside. If I were to make this a little bigger just so you guys can see what I'm talking about, right? That M that is introduced, the candle before that candle, that displacement candle on lower time frames is present. We can see a lower time frame redistribution as well. Now you guys don't have the seconds, but this is for the behavior. Understand that even though I'm on the 1 minute in the 15 second, this can be applied to a 4 hour and a 1 hour chart, right? What I mean by this is we get that liquidation rate to the upside right here, creation of those equal lows, right? And then we get that displacement to the downside. Here's your supply candle that is formed, right? We saw that redistribution on the 1 minute. And then now we are looking to take this trade lower into those areas, right? So let's go ahead and watch what price does now. It comes into our area of supply, right? Here's your 15-second candle before candle that broke structure to the downside. It's starting to fill areas of imbalance as well. Now within this point in time, we want to see price respect this with ease, right? And start to just fly off of it due to our bias, right? And this is what we get. We get an automatic displacement candle to the downside. Let's go on our lower time, or we are on our lower time frames looking at even here, right? We get a low. So if I were to take this away real quick, let's look at the structure even within this 15-second structure, right? Same exact scenario. So we get a low, high, higher low, higher high. This is our break. We get a low, and then we get that high right here. What happens? Price breaks that. What happens? Price breaks that. Our imbalance is introduced within this area right here. If price respects this candle or respects this imbalance, we will see that continuation to the downside. So it's still that structure, right, that we are seeing. We see the break here, we see the break here. Let's go back and put this back, and then watch what happens, right? So we're looking for price to jump off of our zone. It ends up jumping off of our zone. We get that mitigation of that supply candle that showed that break of structure to then the downside. Right there. And then we are looking for now that continuation. So if I go to the 1 minute, we see now price break this range, right? Continue to start breaking lows. So even though it is leaving all these highs, do we have to take those highs? No, we do not. Just because liquidity is present does not mean it has to be taken. It needs to be paired with other confluences such as supply and demand, right? Wyckoff and those double market structure breaks, right? The market maker M's and W's that are present to show that accumulation and distribution within your area. Anything on its own will not work. Wyckoff on its own will not work. Structure on its own will not work. Supply and demand on its own will not work. We need multiple confluences to tell us everything that we need. So Let's go ahead and watch what price does right here. Mitigates that supply candle, continues to make higher highs and higher lows, and then we see that final displacement candle to the downside, targeting that higher time frame liquidity that was presented right here, right, from this week low, right here. But remember, if we still respect this low that was created right here, do not break structure and show some type of liquidity raid and instead break structure to the upside, then I will look for higher prices overall from our overall bullish structure. Internally we are bearish, overall we are bullish. So let's go ahead and watch what price does now. We have that area of liquidity. It starts to bounce, right, off of areas of demand, previous areas. This is retail dumb money getting into trades, believing that this was an internal, right, break of structure to the upside. They're trying to get into demand zones right here, which it was, right? We saw this high created right here, break of structure right here. Where's the second break? Right here. There's that W again, right, that we were talking about, where we are looking for that accumulation to then come in, right, show us that price is starting to show some type of demand, as well as we are still consolidating within discount of our overall range. First half, right, distribution, left the lows. Second half, accumulation, leaving highs, right? Once we come into this area of supply, we start to leave these equal highs that are present right here. So now let's get rid of this W, understand what we are looking for now at this point in time. I have a 15-minute, right, liquidity raid to the downside. How do I know it's a liquidity raid? We can see those wicks right into these areas lower, as well as price still respecting that low that caused a high overall. Let's go ahead and play this out. We get a break of structure to the upside right here on the 15-minute. So if I were to show you the 5-minute, right, we can see this wick that came up. This shows our first, right, possible break of structure. We will look to confirm that, right, with that second break to show the W, introduction of demand within our higher time frame demand zone, within discount, right, showing accumulation after this move to the upside right here. So we came down, absorbed this demand, mitigated demand lower, and we are starting to show possible breaks of structures to the upside. We see a break of structure to the upside right here. If I go on the 15-minute, right, that candle before that impulsive candle right here that broke that structure point to the upside. We're looking for price to respect this, break another structure point to the upside. After coming down, we come down. We have another high that is presented right here on the 5-minute. We then see that break that is presented right here. We have a liquidity raid to the downside, break of structure right here, imbalance that is presented right here if we go on lower time frames. I believe it was the 3-minute. Yes, we get a break of structure here, demand candle that is formed right here. And then we have that imbalance as well. So we'll look for, again, price to come down into these areas, raid liquidity, break structure to the upside, and then introduce demand, and then we'll look to take our trade. So we see one impulsive move. We see price come back down into those areas. Let's go on the 1-minute. And then we now have another liquidity raid to the downside right here. Fill of that imbalance that we were talking about before. We mitigate this 1-minute institutional candle right here. And then we break structure to the upside. I'm looking for the institutional candle within this point in time. Why am I looking for the institutional candle? Well, if we see this break, right? This break right here to the upside. Does this show a lot of impulse, right? A lot of imbalance, everything that we wanted to see? No, it does not. We can see a reaccumulation to the upside. We saw lows that were left, right, as we came into this area. But I understand if we still respect this low, right, that caused this internal high, then we can still continue to the upside. Let's go to the 30 seconds so you guys can see exactly what I'm saying as well, right? We raid liquidity to the downside, and let's watch what happens. We get that raid, right? Now that our 1-minute has shown, again, more liquidity raided, mitigation of that institutional candle from the double break of structure here, that 15-minute break of structure, 5-minute break of structure, 1-minute break of structure, right? Everything is coming into place now from our higher time frame for our bullish structure, right? Everything has now lined up, and I'm now looking to take this trade higher. So now that that has occurred, I am in that trade, right, with my stops underneath the most previous low that is presented, looking to take it into areas higher overall. Where is retail shorting this? Where did retail short this? Where did we draw this out? Right? Where was that trend line? Price came back up, dropped again. They got in more shorts at these areas. What do we see? Equal highs that are formed at these areas. Price is leaving reason to come back up, right? As well as showing that bullish structure, as well as introducing demand, as well as staying in discount, right? We have all of these confluences coming together. So let's go ahead and see how price reacts to this zone. We want to see it jump off of that zone, right? We saw that first bullish candle with impulse that showed us what we wanted to see. And then let's see now what it does. We want more of a range break for that continuation, right, of this high right here. Once we see this broken, we should see higher prices overall. We put in a higher low right here, fill this imbalance right here, and then start to move higher overall. So if I go ahead and play this out on the 5-minute, understand what price did, why we are looking for these areas higher, right? That overall break of structure to the downside. Let's go back to the 4-hour. I had this on the daily actually. Yes. Displacement candle to the downside. We filled that fair value gap right here, came to the downside, rated liquidity, introduced demand. We're still continuing bullish, looking for areas of supply higher. Our 4-hour is still bullish from this low, right? That caused this high. We rated liquidity, broke structure to the upside. If we put in a higher low, which we did, right, then we'll see that continuation. Hourly break of structure to the upside right here with this high broken first, this high broken second, and then we raid liquidity. Did we get a close with displacement underneath this low? No, we did not. We came down and instead broke structure twice on the 15 minutes, showing us that price wanted to show. Now, that 15-minute higher low from the hourly bullish possible structure that we put in, 15 minutes shows that. We go to the 5, go to the 1, right? And then now we are in our trade looking for those higher prices. Does price jump? Yes, it does, right? First TP would be at this weak high that is presented right here that we were talking about. And then the overall take profit would be at that area of supply that we had talked about before. Now, if I go ahead and play this out, I believe prices, yes, prices right here currently. We're still looking for those higher prices, right? We've been literally catching or sitting with gold, right, for this entire range breakdown, talking about how we wanted those higher prices, how we were looking for those higher prices into 1803, right, overall. So I wanted to talk about too where retail is shorting. So we saw this move to the downside right here. We saw that retail was shorting right there as well, right? But even as quote unquote smart money traders trading just market structure, look and see what I mean here. Let's go to the 4-hour, right? We see this move to the downside right here, this fat displacement candle. What are you doing as a market structure trader, right? On the 4-hour from our daily break of structure to the downside, so we're still technically overall bearish, right? Within this range from this high that caused this low right here. What am I doing when this happens, right? Just playing market structure, just playing market structure. I'm shorting this as a lower high, right? To take it to the downside. Because that's all it is, right? I want to take this to the downside, continue to take this to the downside. It's going to create a lower high and take out these lows down here. Yes, that is still the bias, but do we have the confirmation of that? No, we do not, right? That's just market structure. Instead, the structure remains bullish, right? Right here from the overall bullish structure that we have put in and raids lows, breaks upside, right? Shows those bullish confluences that we are looking for. Then we now have the ability to get in a trade, and then we are immediately green, right? And that is the beauty of these concepts, right? Because let's go here. Let's say I got in this trade right here after everything came together and price respected this demand and continued, or supply and continued to the downside, right? One, I get break even. Okay, right? Now I have a break of structure to the downside, a redistribution, and I have an area of supply. Now telling me my bias is wrong, right? And I now have an opportunity to take this lower. So we can see now how I would sacrifice, right? Those few pips, those few trades, 1 or 2 trades, trying to look for those trades, right, to the upside from our overall bullish bias. But if I was wrong, then I now have a bearish bias and I now have the ability to take this lower, right? And that's how we can start to get very comfortable, because we understand where price should go, right, where it should respect. And if it does not respect that, then that way we can disprove then our bias. So that was XAU. on that, right? We talked about this short yesterday. We talked about this short today. We talked about this long today. So we're going to go ahead and go over to GJ now. This was a trade that was posted, right? In chat. It was a long that we were looking for yesterday from our overall bearish bias. Okay, so similar situation. Overall, we're still bear, but our internal structure is still bullish, so we are still assuming bullish continuation, right? I'm not going to go too super deep into this one because that's just what we did with gold, and I wanted to save a little bit of time so we could get into ETH and Bitcoin, possibly a little bit of ADA as well, to look for what we're expecting coming into Friday with the volatility tomorrow, as well as the weekend. But we can see right here, right, just reading price action. Don't even worry about anything over here right now. Just read the price action, right? Price came down over here, created this drop-based drop, right? Area of supply. That supply, again, broke another low. We see price come up into that area from this candle, right? Or this imbalance fill right here. Price comes lower, takes out this liquidity to the downside, puts in another redistribution, ends up breaking that structure point to the upside. So now we have an area, right, to look to possibly get into trades from. We see price come back down over here, raid this liquidity, respect this demand candle before the candle that broke structure to the upside out of this range. Raid liquidity here, break structure once, break structure twice, respect this demand, right, continue to areas higher. Same exact thing, just like it was with gold, right? How many short traders do you think got into trades right here? Whether you're supply and demand, whether you're institutional, whatever it was, how many short traders do you think got into trades right here? Loads. And how do I see that? From all of these highs that are present right after this mitigation up here. We know we're still bearish overall, right? But structure is not showing us that yet. Why? Because let's go over here. At this point in time, right, if I were to go to replay mode, let's just take all of this off real quick. Let's just hide that. Take this back, go to replay mode real quick, right? Understand where our range was presented. Our 4 hour is still bullish, right? Let's go to the 1 hour. We know that if we still respect this low or this low right here, raid liquidity to the downside, we could still reaccumulate and come into areas higher that are unmitigated, right here. And then our overall, if I go to the daily range, show you that daily fair value gap that was formed right here as well. Following a liquidity raid to the upside. So let's go on lower time frames now. Look at what we were talking about before. Understand our range, understand what we are looking for. So if I draw the fib retracement, right, we are showing, right, that first half distribution. Second half, we're looking for a liquidity raid to the downside, show of demand for that introduction of demand, right? We see all these squares that are presented right here, but don't worry, I'll go into lower time frames and show you what that means in a second, right? But at this point in time, we are still bullish if we hold this hourly low that presents this high right here, looking for the 15-minute structure to then break upside, right, to show us what we want to see. We see that break of structure to the upside right here. Looking on the 5-minute now, we get a break of structure to the upside right here. Where's the demand candle that is presented to us right here? I want to see some liquidity being formed right before this demand, before the continuation to the upside from our overall bullish structure. So let's go ahead and watch what price does now, right, as well as the 1 minute. Price starts to create some liquidity, it starts to create some highs, right? And this is where I originally was starting to get very interested in the trade because I started to see an impulsive candle, possible liquidation rate to the downside, and price could have just respected this then fair value gap right here, reaccumulate, right, and continue to the upside. So if it didn't raid this liquidity, instead raided just this 1 minute liquidity continued to break, then I was still looking for those higher prices. All right, we see it created more liquidity, came back down, took these lows out right here. Then it moves up, takes out all these equal highs right here, fills this imbalance from this high that caused this internal low right here. So we are expecting those lower prices still. Price comes down into these areas, mitigates that 1 minute, right? Candle before candle that broke structure to the upside that sponsored this move to the upside. We can see that presented right here. And then we have a high that caused that low. We can see the equal lows that are formed here as well. We're looking for a double market break of structure. We get one right here. We get a second one right here. And then we get this move that is presented right here, right? So we got our 2 breaks of structures to the upside, an area of demand that we can look for price to now come into, right? We see this reaccumulation that caused this high right here, as well as left more highs, and all of these highs that we have presented here. So now if price breaks structure to the upside, I can just expect that continuation and price to just fly to the upside, right? Because that is what I want to see at this point in time, due to all of the analysis that we have done up until this point. So one, I could wait for price to break this high if it just respected this high that caused the new low for the full right confirmation of the entire range break. Let's go ahead and play this out. We get that break that is presented right here. I get an institutional candle. Why am I choosing the institutional candle again? Because we got a liquidity raid to the downside and then immediately got that break of structure to the upside internally on lower time frames. If I go to show you the 15-second, right, we can see where price actually broke structure. Down here, we got a break of structure here, break of structure here. Our low that is presented to us is right here. So I want to see again. Let's just move this to the left. That mitigation of this zone, right, for the continuation. So let's go ahead and play this out now. It comes up, starts to consolidate, comes down lower into these areas. So let's just bring this back over here because we were not in on the original breakout. We were waiting for the liquidity raid. What happens? We raid liquidity raid to the downside, right? Fill imbalances. It's the same thing over and over again. We are now in our trade, right? And I'm not going to be showing you just the 15-second. I just want to be on the 1 minute, right, for this point in time. But we can still see we're respecting this low that caused this high right here. So we can still look for price to then continue to the upside, right, from all of our confirmations and everything we have done up until this point. So now I want to see price jump, right, and take out all of these highs. What does it do? We break structure here. And then what happens? We jump, right? There's the impulsive move telling me that the range has broken. And then what happens up here? We create more equal highs, right? That's telling me that our overall bullish bias is starting to come into play. Let's look where demand was created. Let's look where imbalances were created as well. So we got a range break right here, area of demand that is presented to us right here, as well as an imbalance. So we could either come raid these lows, fill this imbalance, continue to the upside, or come all the way down into this area and then continue. What happens? We get that introduction, right? Price is continuing to the upside. Huge impulsive move to the upside, takes out all of these highs. So everyone that was trying to get in these short trades or get in any types of trades for literally 11 hours, right? Almost half a day has been stopped out of their trade. And now they're like, oh, it's wrong, right? I'm out of my bias. It's breaking out. And then this is where they start buying, right? This is where they start getting in those breakout trades, right? Because they have their levels in place, right? They're like, this level's right here. If it goes over that, let's just go ahead and take this away real quick and draw a long position. They're like, if it goes over that, I'm having my stops right here, right underneath the whatever low that is created, the most recent low that is formed. Then I'm going to look to take it higher, whatever they're looking for, right? 1 to 1, 2 to 1, whatever it is. So we see price come down, mitigate these areas, reaccumulate, break structure to the upside. Breakout traders stopped out of their trades. Now that all the early longs are stopped out of their trades, we're looking for the continuation to the upside. As long as we respect these lows right here, what happens, right? We get that continuation to then the upside. So you can see how these breakout traders are getting out of their trades, right? How they're getting manipulated out of their trades and why we are waiting. If I show you the actual entry here on lower time frames, it's difficult on the minute due to not having the seconds, right? But we can see this break of structure that occurred to the upside right here. This institutional candle, right? That was in place from that. This was your break right here. Candle before that candle was proven right here. This was your imbalance before that. Let's just get rid of this to show you guys what I am showing, right? Lower time frame liquidity rate to the downside. We still respect this low that caused this high. Come back down again, raid more liquidity, but we're still respecting this low that caused this high. That's telling me price is reaccumulating, right? And then we get that continuation. Breakout traders are stopped out of their trades. We take out more longs, and then we look for the continuation. So we are in our trade back here, right? If I go ahead and put that out again, draw out that long position, and we're looking for the higher time frame supply. Let's go to the 4. That was presented, right,
from this move, this break of structure to the downside, and we know that we could possibly fill this fair value gap as well from the higher time frame liquidity rate here, and then break of structure downside that is presented here. So let's go to the 1 hour, or sorry, let's go to the 15-minute and understand what we did. So let's say your breakout trade is stopped out of your trade right there, right? Now you're getting in more trades. You're getting in more trades after it starts to break out again. You're like, it broke this level. I'm getting in more buys, right? Everyone is starting to long this trend. Let's go ahead and just bring this back. Look at the trend line, right? Same exact scenario. I'm not sure how the EMA would look at this point in time, but we can just throw it on, see if that shows anything. Yep. Perfect, right? We see where the lows are presented. We understand we're still coming into premium, right? But it looks like everyone's getting in trades at this point in time, right? Trying to take it higher once it breaks out of this EMA, breaks out of this trend line, breaks out of their level, right? Whatever it is that they have in place. If I show you the hourly, right? There's your break. There's your hourly break of structure too, or sorry, not break of structure, but there's your hourly break to the upside right here of the 200 EMA. So we can tell, and by showing right here too, if I go to the 15-minute, look at that break, look where it occurred, and look where the equal lows are, right? It's right there. We can see it start to show up, and this can be shown through either indicators, right? Or those equal highs or equal lows, just to keep it clean, right? To keep it simple. But we're looking for that higher time frame supply zone. We understand it could come up into these areas, mitigate these areas of imbalance, and then continue lower. So let's go ahead and watch what happens now. We saw where all the retail traders were getting in, right? All these lows that were presented right here. We know we're still bearish overall. So let's see what happens. Price then takes us out of our trade. We're completely out of our trade, right? 21 to 1 done. Let's go ahead and put this to the side right here. And then let's watch what price starts to do. We're creating more lows as we're coming up, showing unhealthy signs, right? Just pushing up, creating higher highs and higher lows. We fill that imbalance, right? I believe this was 7 o'clock on the dot. Yes, we had news that came out yesterday, but do you see how the news is lining up as well with our bias? We know that higher time frames are bearish. We know that we are looking for that supply to be mitigated. And right at 7 o'clock when that news, right, hit, that volatility hit. So people got into trades thinking that it was going to go which way, whatever it was, based off of just the news, based off of whatever it was. And then we saw that liquidity raid, and then the final break of structure to the downside, proving our distribution, right, from price continuing to maintain premium. So let's look at this high right here, or this low and this high right here, and see that same exact thing. Did we come into discount, guys? No, we came into it once, right? Once right here, and then we left all of these lows, came into premium, and then continued to push into premium, right? That's starting to tell me that unhealthiness is being shown right here. And I had noticed that as well, right? As I was looking to get into this trade right here, because we can see all of these lows that were formed right here. I was like, well, price could come down here, you know, possibly raid these lows and then continue to the upside. And I could have seen something like that, but we were still playing the structure, playing everything that came to us, and then from that we got that trade, right? But we saw the distribution that started to be formed. We're looking for that upthrust after distribution, right? Here's your first distribution, side of weakness from these internal breaks to the downside. Price comes back up, and then we get that break of structure to the downside overall. And let's go ahead and watch how this ended up playing out, right? You get that fat move to the downside. So now everyone that bought this breakout just got stopped out of their trade. What are they probably doing right now? Shorting, right? So we're looking for that pullback to an area of supply or redistribution, introduction of supply to get out those early shorters, trying to catch the continuation, as well as the early longs trying to catch a bottom, right? For then the continuation to the downside of possible areas of demand down here in discount, right? Rating liquidity, so then we can possibly either see higher prices or respect supply and continue to the downside to areas lower, right, of all of this liquidity and from our higher time frame range that we have right here, right? So again, just keeping our bias, understanding what we are looking for over and over again will help us immensely, right? So let's go over ETH now. I did go over just now the GBP JPY pair for a little too long, right? But that's completely fine. We'll go over ETH real quick, what we saw for the trade that was presented to us the other night, right? How I was looking at it. I believe it was this chart actually. Yes. Okay, cool. So we had this range that was created right here, right? This was when I believe Silent hit me up, talking about a scalp, and this was the current price action, right around here. So we came up, right, broke this high right here. So the only thing I'm worried about is this low, this high, and then anything within that, right, is going to be internal structure until I get a liquidity raid. Mindful, until I get a liquidity raid. So any structure that happens within here, I do not care about. Why do I not care about it? Because it is just retail liquidity. We cannot move higher or we cannot move lower, right, until we get either the early shorts or the early longs out of the trade to then show us where we are looking for. So I posted an example, right, of 2 plays, and I said, well, price could either come down here, right, raid these lows that were presented right here, and then reaccumulate and continue to the upside from this break of structure right here, right, and continue to areas higher in supply, maybe this liquidity right here, fill this imbalance right here, right, and either continue to the downside, put in a higher low, and then continue to the upside, or we will have to look into the future when that comes to place, right? But right now, I'm only worried about this. I'm not worried until I get it liquidation rate of either these highs from this range or these lows from this range, mitigation of either demand or supply, and then the continuation, right? Lower time frame supply was presented over here. We can see the equal highs that were presented over here as well. I'm not even going to give you the lower time frame supply over here because that is not what was important. We are looking for the introduction, right, after a break of structure, after a liquidity rate to look to where we could take our trade. So we got that reaccumulation idea, right? And then we have another idea. Why was I looking for the reaccumulation? Well, from the break of structure, possible liquidity, and demand mitigation. Now for the for a possible distribution, what would I be looking for, right? Price to show those highs, right? And leave those lows. So we continue to manipulate highs and leave lows, continue to stay in premium of our range. Look at our range, look where we are at, and look where we start to leave lows. Look at all this sell side liquidity we start to leave. We start to come higher into premium. We break structure to the upside right here. And then price comes up, right? We raid those highs right here. We can see that liquidity raid to the upside right here of that range. Let's go on lower time frames. Right? You can see your raid that occurred right here. So at this point in time, right, I was on the 15-minute, and I saw this liquidity raid to the upside, and then I saw the most recent demand, right? Everything is showing me one thing, mind you. Again, it's the same exact spot, right? Multiple confluences within one candle, within one area, right, to show me where I want to take price. So I chose this low because it's the most recent low that caused this high right here. So if this low is broken, then I can look for areas lower into demand and areas lower overall. Because look, right, we have liquidity that is presented here from our overall range. We respected this high that caused this low. So we can still see price come down lower into these areas, either respect demand or raid liquidity overall from this higher time frame, right? Possible break of structure to the downside. I see breaks to the upside, right? I'm still looking more bullish on Bitcoin and ETH right now, but we were playing the structure showing it as is, right? So we're looking for that break of structure to the downside right here, and then we can look for another break right here following. So we see that first break that is introduced right here, right? Let's go on the lower time frames, understand what happened as well. We can see this low that was presented right here cause this high. So we get that first break, price comes up into that supply candle, right? And then respects that and then breaks structure to the downside of our reaccumulation that we were talking about, right? So where's your candle before that displacement candle that broke structure? Well, lies right here, right? This candle before the displacement candle that broke structure to the downside. Why did I draw it like I did? Let's go to the lower time frames. Let's look for multiple confluences. What is this? Drop, base, drop. Broke structure to the downside. Here's your displacement candle, right? Candle before this candle that broke structure to the downside lies right here. So it's actually this entire candle, right? But we can refine that, right? If we go to discount or premium of our candle and understand that we are showing multiple confluences. Yeah, I'll go ahead and look at BNB after this. But we are showing those multiple confluences, right? We can see price comes up into those areas, raids liquidity to the upside, breaks structure to the downside, breaks again, comes back up into these this high that caused this low from this break of structure out of the range, and then we see the final continuation from that. That's why we were looking for shorts, right? So let's go ahead and watch what price does now. drops off, right? Area first would be your liquidity here. You could either target this liquidity here or the overall liquidity that we had presented down here, right? This demand zone that was presented as well. So let's go ahead and watch as it plays out. And then we'll go ahead and check BNB, and then we will wrap it up for the night. Just go to the 15. Yeah, see, we raid this low right here, come up into this imbalance, right? And then break structure to the downside. We have our area of demand from this break of structure to the upside right here. Let's go ahead and look at the candle before this candle that broke out of the range. Boom, presented right here. Comes back down into there, raids liquidity. Then we can look for possibly higher prices if we can break structure and show, right, that impulsive move to then the upside to show us everything we want. Right now we are showing some type of liquidity, right? Not a lot of imbalance on this move to the upside. Not showing me a ton of what I want to see, right? I would rather see the impulse showing me that price wants to move after a liquidity raid to either the downside within this situation for those higher prices overall. So let's go ahead and take a look at BNB now. Then I'll go ahead and wrap it up for the night. Might be down here. So now we'll just add it. Yes, I do have it. That's funny. Alright, BNB. Let's find you real quick. Now I have to make this like this. Alright, here we go. Okay. Taking a look at BNB. Higher time frames to lower time frames always. Let's take a look at our weekly structure. We can see we got this raid to the downside right here of all of this buy side liquidity from literally February 21st, right? From this entire range that caused this massive move to the upside, right, into all-time highs at 698. This does actually look pretty good. I'm starting to like how this is starting to look. On a weekly time frame, to want to see a continuation to then the upside, I would look for a weekly close over this high sitting here at 319.4 on the weekly, right? And then a mitigation of possibly this institutional candle that caused that after a liquidity rate to then the downside. Confirm that with your daily structure, right? Down here at this area of 243. Now this is only the weekly right now, right? This break hasn't been given yet, so we could get another area of demand that is introduced right here, right within this wick, this candle right here. So let's go ahead and go to now our lower time frames. Looking at the daily, we can see this high cause this low right here. We could possibly see lower prices, but we got a break of structure to the upside right here. Higher lows are being formed. Another break right here. This is where our next range was created. We got a liquidity raid to the downside here. Another break to the upside here. We have an imbalance within this candle as well. So we could look for some possible buys within this area lying from 271 to 249 again on the daily structure, because this is our weekly right trend that we are looking to play, and then take it into areas higher at 372 and even I would say possibly 508 overall. Just looking at the structure that we have presented here, we have the supply zone, price came down, broke structure to the downside, mitigated that supply zone. Our next unmitigated zone lies on the 4-hour, I would say at 508. Going back to the daily, break down here as well. Displacement came back up, hit that. Yeah, areas around here. Break a structure to the downside here. Look at this imbalance fill around 484 and 476. If we can break this structure point to the upside, all of these highs that are presented right here should continue. As far as any shorts or anything like that, I wouldn't be too confident in getting into a short trade right now. We are coming up into these areas, possibly mitigating these areas of supply from this high that caused this new low right here. But we aren't receiving, right, any strong displacement candles at the moment. Let's go to the hourly, right? Nothing super strong yet. This low caused this high, so as long as we're maintaining, right, this range, we can still see higher prices. I would still want us to come mitigate supply and then show a fat bearish candle to the downside, right? That displacement, literally a right? Well, as he talks about that elephant in the water, like it's there, it's not unnoticeable, and it's showing you that price wants to move a certain way. So with that being said, I appreciate everybody that had joined, everybody that got into the stream with me today, right? Got the information down, sat through this, sat through me listening to, or sat through you guys, and sat here, sorry, and listened to me talking through all of these analysis, right? Through all of these candlesticks, through all of these charts, to start to get that better understanding for your guys, for yourselves and for your guys' trading careers. I appreciate everybody that had popped out. Again, if you guys have any questions or anything like that, feel free to let me know. DMs, chat, wherever you guys want to. Just at me, let me know. And with that being said, I appreciate again everybody that popped out, and I hope you guys have a great night. And I will see you all later.